So for my realtors, these are the 5 reasons your clients are not getting pre-approved, and the 5th reason may shock you. Number 1, probably the most obvious, credit. While everything is not based on a single score, it is based on their credit profile. As a lender, we're looking at giving you hundreds of thousands of dollars. We need to know you're actually going to pay it on time. So your client's credit profile, including any late payments that they've had, debts that they have, collections that they have, that's all giving us an idea of how likely they are to repay a debt. So if you have clients and they are working on credit, I tell them, number 1 thing, set all of your cards to auto pay. The last thing you want when you're working on credit is to have a late payment pop up. So set your car payment, set your credit cards, set your bills that report to credit to auto pay. It is honestly better to overdraft your bank account than have a late payment on your credit. Credit will always be number 1, unfortunately. Number 2, the sad one, income. So as housing prices continue to rise, like for example, here in Charleston, we're over $400K on our average price of a home. Income is not rising at the same level. So we have a lot of individuals that in order to qualify, they would have to make substantially more income, or they would need a co-borrower, or have a ton of cash to put down. So income is the tough one, because I can't just tell clients, oh, you just need to make more money. But income is one that they have to consider of whether or not they're going to be able to buy on their own, or maybe what type of job they're going to take. If they have 2 different job offers, maybe they do take the one they're a little bit less excited about because they make more money because their goal is to buy a home. So like I said, it's the most unfortunate one, and the one we as lenders just really don't have any control over. The other thing can be if they're switching from W-2 to 1099. We can't just go, oh, well, you were a guaranteed hourly employee and now you're just going to go make stuff on Etsy. No, we have to see if they're switching over to 1099, at least a year to 2 years of that, to see how that income is going to flow. Third reason your clients may not be getting pre-approved is debt to income ratio. We are always looking at a client's debt to income ratio, no matter the loan type. Each loan type has its own debt to income ratio that we have to consider, but we're only looking at things that report to credit. So we're not looking at like their utility bill or how much they spend at Ulta, unless it's on a credit card, or how much gas they buy. We're just looking at what reports to credit. However, we know that these debts are going up and up and up. I can't tell you the last time I saw someone with a car payment under $400. On average, I'm seeing them more at $600 to $700 for car payments. We're seeing a lot more credit card use as we see inflation and income's not rising. And then we have the lovely student loans that Lord knows what they're going to do with them. So debt to income ratio is a big one. And again, the debt to income ratio is going to determine, can you buy by yourself or do you need a co-borrower? I think we're going to see more and more individuals that have a co-borrower, especially first-time home buyers. So debt to income ratio can kill a deal really quickly, unless we have funds to pay off some of those debts. And even there are special, like on VA loans, you can actually use a seller credit to pay off a debt. So sometimes we do have a workaround, or if not, we may have to tell a client, hey, you've got to tackle these specific debts to be ready. Number 4 that will kill your deal is assets. It is at least once a week that I have someone who's attempting to buy a home with, only double digits in their bank account. And us as lenders, we're honestly not quite sure where this idea came from that you can buy a home with $0, because you can't. Even if you have a down payment assistance program or your VA or USDA and you don't have a down payment, you still have closing costs, right? And let's say, okay, well, we can get the seller to cover those. Cool. You still have an appraisal that's on average around $600. You still have an inspection, which could be $400 to $500, and you still have earnest money that you have to put down. So there is no true zero out-of-pocket loan. There's 100% financing loan, meaning we finance all the costs of your loan into it, but there is no zero loan. So I see this a lot where we do have individuals that unfortunately have not been able to save, and beyond even a down payment, because again, there are usually down payment assistance programs that we can look at if we're pretty close. But individuals that have not even begun to save for their earnest money, their appraisal, or their inspection. So we as the lenders have to do a lot of education, and the realtors too need to be doing a lot of education of, no matter what, these are the bare minimum costs of buying a home, even if we can negotiate quite a bit else for you. So assets can also stop a deal unless they have a family member who can gift them funds, and then sometimes we're Gucci. The 5th reason your clients may not be getting pre-approved is the lender. Yep, us, the lender. So each lender has a different set of products they use, may have a different level of experience, and works the file differently. So some of us, like myself, have a really high rate from application to pre-approval. The average is only about 50% though for the whole group of lenders. So that tells you there are a lot of lenders that are not pre-approving people when maybe they could be pre-approved. So most of us who've been doing this a long time, we are here to work a file like a Rubik's Cube. We will work it and work it and work it until we can hopefully find a solution, because we need people to be pre-approved, as do you. So I would say if you have a lender or referral partner you've been working with for a while and you're finding a lot of your clients are not getting pre-approved, it may be time to also talk to another lender like myself to see if maybe it's a credit thing where they have a threshold that just doesn't work for your clients, or they don't offer programs that your clients need, or again, they're just not knowing the guidelines. If you don't know your guidelines as a lender, you don't know your job, truth be told. So it's always good to have lenders that you feel actively work your files and get those difficult clients ready to be pre-approved, especially if they're using online lenders. If your clients are coming with online pre-approvals, please, please, please encourage them to actually work with a human being, because that pre-approval could be worth not even the email that they got it on. So those are the 5 reasons that your clients could be not getting pre-approved, and sometimes maybe they should. If you have any questions or want to talk about your client's specific situation, reach out.